Welcome back to Daffy's Digital Playbook. Let's get into it. So you want to invest in crypto, huh? Well, if you want to start investing today, this video is going to be your roadmap from zero to holding Bitcoin. What is crypto? So before we dive in, let's make sure we understand exactly what crypto is so we know what we're getting into. Now, there are thousands of articles online explaining what crypto is and how it works. And while they're all good explanations, most of them are way too technical for a beginner to understand right away. So here's the simplest explanation I can give you. A blockchain is essentially just a digital ledger that records transactions in a specific format. These transactions are grouped together in blocks. Once a block is filled with transactions, it is added to the chain of previous blocks, hence the name blockchain. You can think of it like a spreadsheet. Every time someone sends some Bitcoin, that transaction is recorded in a block. And once the block is full, it's added to the chain of previous blocks, kind of like adding a new page to a spreadsheet. That's basically what's happening behind the scenes. And since this spreadsheet is stored across a network of computers, it's nearly impossible to tamper with or hack. This makes cryptocurrencies like Bitcoin and Ethereum very secure. How to get started? So now that you know what crypto is, let's walk through how you can start investing today. But before you can do anything, you need to set up an account on a major exchange. Now, there are hundreds of exchanges out there to choose from, but we're going to focus on the big dogs, the Coinbases, and Krakens of the world. And here's why. It might be tempting to go with a smaller, lesser-known exchange because they often have more exotic coins listed and sometimes even offer higher interest rates on your deposits. But when it comes to investing, safety should be your #1 priority, and the bigger exchanges are simply safer than their smaller counterparts. To be clear, no investment is completely safe, and that's especially true for crypto. But sticking with a larger exchange will minimize your risk. So for this video, we'll use Coinbase as our example. But everything we talk about can be applied to other major exchanges as well. The first thing you'll want to do when signing up for an account is enable two-factor authentication. This means that in order to log into your account, you'll need more than just your username and password. You'll also need a temporary code that changes every 30 seconds. This code is sent either to your email address or an authenticator app like Google Authenticator or Auth. This adds an extra layer of security and will help keep your account safe from hackers. Next, make sure to choose a strong password. I recommend using a password manager like LastPass or 1Password to help you generate a complex password that you unforget. Don't use something stupid like Quordle, and for the love of God, don't use your birthday or your pet's name. And whatever you do, don't store your password anywhere. Write it down, type it out on a piece of paper, or save it in a text file on your computer. If it's written down somewhere, it's only a matter of time until it gets lost, stolen, or hacked. The best place to store your password is in your head, and if you're worried about forgetting it, use a password manager. It'll generate a complex password for you, and you only have to remember one master password. Investing versus trading. Now that you have your account all set up, it's time to choose between investing and trading. Most people entering the cryptocurrency space for the first time will opt for investing. This is where you buy a coin or token with the intention of holding it for a long period of time, usually more than a year. Traders, on the other hand, are constantly buying and selling with the goal of generating profits in the short term. Sometimes traders will use leverage, which allows them to control much more money than they actually have. While this can result in huge profits, it can also result in huge losses. Leverage is like borrowing money from the bank to buy a house. If the value of the house goes up, you make money. But if the value of the house goes down, you could end up owing more money than the house is worth. Now, obviously, leverage trading is risky, and I wouldn't recommend it to anybody who's new to crypto. There are also dozens of different ways to trade, such as day trading, swing trading, arbitrage, and the list goes on. And while these strategies can be profitable, they require a lot of skill, knowledge, experience, and discipline. Not only that, but trading takes a lot of time, and most people don't have time to spare. Unless you plan on making trading your full-time job, you're probably better off just investing. Just remember that when most people think of investing in crypto, they're not talking about day trading or swing trading. They're talking about long-term buy and hold. The term HODL was actually coined in 2013 during the tumultuous Bitcoin era. It's basically just a fancy way of saying hold on for dear life, managing risk. One of the biggest risks of investing in crypto is its volatility. The price of Bitcoin has been known to swing 50% or more in a single day. For perspective, the S&P 500 only swings about 1% per day. So when deciding how much to invest, keep your risk tolerance in mind. You should never invest more than you can afford to lose, and always keep an emergency fund of cash on hand just in case something goes wrong. If you're worried about the volatility, you can try dollar cost averaging, which involves breaking up your total investment into smaller chunks and investing those chunks at regular intervals. For example, let's say you have $1,000 to invest and you want to do dollar cost averaging over the course of 10 weeks. You would take your $1,000 and divide it by 10. Then each week you would invest $100 worth of Bitcoin. Doing this will lower your average by price and help mitigate risk. The future of finance, as you can see, investing in crypto isn't as complicated as it may seem. In fact, it's much simpler than investing in the stock market. And as the crypto market matures and more people enter the space, prices will become less volatile and investing will become even easier. Now, I know this video was mostly about investing, but if you're interested in learning more about trading, I will be doing a series of videos in the future covering different trading strategies. So be sure to subscribe so you don't miss them. In the meantime, check out my recent video on the metaverse, which I'll link to below. Thanks for watching, and until next time,